Hello and welcome to Access Middle East. I'm Hadley Gamble. We're kicking off 2019 with an exclusive interview with one of the world's most influential energy ministers, Suhail Al Mazrouei.
Your Excellency, welcome and thank you so much for joining CNBC Live as well as the Gulf Intelligence UAE Energy Forum kicking off 2019. We're live and I have to ask you first about what's happening for 2019, because we saw oil prices on a roller coaster ride over the last year during your tenure as OPEC president. A lot of questions about the strategy coming out of OPEC and OPEC Plus. Certainly, you were conciliatory when it came to what President Trump was trying to do in terms of those Iran sanctions. You were really willing to play the game with him in terms of making that work, but then a combination of Trump tweets and waivers pushed prices even lower. Do you feel that you were trumped?
First of all, good morning, and I think what happened is easily explained. First of all, if we look at the year of 2018, I think overall it was a good year. It was a good year in terms of recovery. It was a year that we achieved the target of stabilizing the market around the 5 years average, and I think we are still at very close to the 5 years average. So the fluctuation, though, during the year and the volatility was not acceptable. I think it was huge fluctuation, and geopolitics at the second half of the year, I think, played the most counterproductive role of the fluctuation. So people and consumers were under the impression that sanctions will come, huge reduction in the OPEC, at one of the OPEC countries, production, from where is going to be replaced. And I think since the summer we said we were not attaining to any politician or political game, so we were not playing with the President Trump or any other president. I think what we do is we hear them. They are major consumers. US is the major producing nation. We hear what they say, but we will always do the right thing from our perspective, which is always trying to maintain the balance. I think what happened is 2 months there has been overproduction. The reason is to attain to the fear that sanctions will come, there is no enough oil. And those months, the waivers were not expected, this from OPEC side. We were not expecting to see them. When they came, we have to deal with them. I think we dealt with them right. Strategy have changed, and we indicated the change in strategy since we met here in Abu Dhabi at ADIPEC. We said we need to change the strategy. We achieved, I think, a historical deal with non-OPEC after the expiry of the 2 years deal to roll over a 1.2 million barrels cut. I think we are now seeing the correction in December. We have seen the correction in December before the deal. January, definitely, we will carry on correcting the market and placing it at where it's supposed to be, at the 5 years average.
When we were here last year, same time last year, we were talking about what your hopes were for OPEC and OPEC Plus, and really continuing to develop all of those relationships, particularly with Russia, as well as other OPEC members. We've seen a lot of changes over the last year. I want to ask you, do you feel, given how much work that you put in, that the minister from Saudi Arabia put into developing those relationships, when you take a step back, do you feel that you can trust President Trump at this point? Because the attacks keep on coming.
Again, we're not in the business of trusting or not trusting presidents. We are in the business of watching the market and correcting it every time the geopolitics as a factor affecting the market. So when something happened, a war, a sanction, and again, it's not only Iran that is under sanction, there's Venezuela, there are others, there is disruption of production at many OPEC countries, non-OPEC countries, even outside the OPEC and non-OPEC deal. So we always historically dealt with those with adjusting the production to ensure that we keep the balance in the supply and demand.
Tell me, what are some of the specific concerns that you have in terms of the geopolitical headwinds for 2019 specifically?
One is the potential of heated war talk about between China and the United States. I think this is one fundamental, not only affecting us, but affecting the whole economics of the world. And I tend to be, we had a discussion in the morning, I tend to be more optimistic that we are not going to see a war. It's a negotiation tactics. They will land on a resolution, whether it takes this year or part of next year. So this is one thing. How much is coming from the shale oil production, I think that's another factor that we need to watch, and we need to advise that it has to be reasonable.
Is it time to change tack there? Because at this point, I think we could say that the strategy from OPEC hasn't really worked so far, and that industry continues to grow.
No, I think the strategy have worked. We have corrected the market despite the huge growth from the shale oil. Okay, so the tactic was not to slow down the shale oil production. The tactic was to ensure that we take the oversupply from the market, and we did it because we were helped by the healthy growth that we have seen in the past 2 years. Now, 2019, what is the real growth rate versus the expectation? The expectation slowed down, but the real, it may surprise us, and like it did in the past, and we see another good year. So I'm not pessimistic about 2019. All in all, taking all of those factors, I think we can work together. One factor that is affecting, to a certain extent, the shale oil production is the infrastructure. We know that they need until the fourth quarter. So if we manage to correct the market, then and working around those numbers, the 5 years average, I think we can grow as well as the shale oil production. What we need to see is a build up in the capacity, because the United States will increase in 2 to 3 years, and then once that slowdown happen, you need other producers to be ready to take that production and ensure that the world is well supplied.
What about the market share there? Because the question, of course, is always prices, stability versus market share. And so many people would say that you're really losing that battle.
I think we're not talking, market share is important, but it's not the only factor that we look at. If you look at countries, they have different some have grew in market share, others have lost market share, but those who have invested, who have tapped into the latest technology, they have, I think they have managed to increase their production and managed to gain from this. The other countries which were closed, they did not open up to the international community in terms of investments, in terms of technology. I think they are lagging behind. But a reality, the world demand is growing at a healthy rate, and we need to continue discovering oil. There is a decline that is happening in many parts of the world. Some countries are losing significant production. Someone else need to increase to take that market share. So the market share, it depends if you look at the overall OPEC, or are you looking at individual countries, and you cannot assume that every country will keep their world contribution market share if they are not doing the right investments.
In terms of what happens next for OPEC, the conversation continues about the relevancy of the organization, what's going to happen next over the coming year in terms of OPEC plus and those relationships. What's your outlook?
I think OPEC will always be there. I said earlier, I don't think we can afford not to have OPEC.
Are we going to see any more departures like Qatar?
No, actually, I mean, if you look at the average, we get more countries joining the organization in the past 2 years than leaving the organization. Qatar it's a sovereign decision. We don't understand it, to tell you the truth. We don't understand the logic, but it's their decision. And Qatar is a small producer. And even when they were given chance to increase their production, they couldn't increase their production. So I'm not worried about Qatar. Qatar is not a country with significant capacity of increase that could risk the market, and it's their decision. So I wouldn't even put lots of emphasis on them leaving. It was not understood, because if you look at the gas and the claim is we're a gas producer, oil is affecting the gas. I mean, when oil prices go down, gas prices goes down as well. So again, it's not understood, but at the end of the day, it's their sovereign right. We respect it. That's their decision, but it's not going to change in the fundamentals in any shape or form. I think what's important is we keep the momentum of investments into the oil and gas happening. We don't want the likes of ADNOC and Saudi Aramco to slow down their investments because they are not seeing the return on investments. We don't want those who are investing in the shale oil slowing down or companies bankrupting because they are not seeing the return on that investment. We don't want to see 2014, 2015, 16 again. And we all know what happened to the shale oil production when they got so excited, they overproduced, then they flooded the market. That one of the risks is that, and I think the fact that the OPEC and non-OPEC are attaining to it and keen on correcting the market, I think they are helping everyone. The other producers outside the group, sometimes they have logic. So we really appreciate what the Alberta government have decided in Canada by reducing their production when they have seen that it doesn't make sense for investors to continue investing. So I think that's where you need to always correct, and the market share for individual countries will depend on how much they are investing on their country and how much the stability in that specific country is.
Are we going to see prices go above 80 in 2019?
I don't comment on prices, and I stopped chasing the price, and we took a policy in OPEC not to chase the price. We will never achieve anything by trying to achieve a price. It's not logical, and it's not practical. I think what we learn is the fact that if you make the market at balance, you will get a price that is good for consumer and a price that is good for the investors or the producers. And that price, whatever it is going to be the price that we have to accept. We don't want a higher price that threaten the world economic growth, because we will lose our consumers. Whenever our consumers talk, we listen. We meet with them. And it's all clear. I think it's clear to the world what we have done after the meeting in June, when there was a concern and that the supply is not going to be enough. We pushed ourselves. We produced more to cater for the balance in the market.
But certainly these economies in the region, particularly Saudi Arabia, need those higher prices to support all of the economic changes that they're undergoing at the moment.
I think you go back to what would keep investments. And what would keep investment is a price that keep those governments running. And if you are not at that price, then they are not going to develop oil. Then the risk of higher oil prices is going to be there. What we are trying to do is investing even when it was a hard time. Abu Dhabi invested when it was tough to invest, when the prices were so low, in the 30s and in the 40s. We kept those projects, and we kept the promise and we were challenged by the shareholders. Some of them are here in the room, and some of those investments. But we pushed because we believe on the market balance. I think those countries will continue investing, and I'm talking about UAE, Saudi Arabia, to balance the market. They are not investing to only look at the economic benefits of it. The other countries and producers in the world are not exactly doing that when the price is not correct for them. So we all seen that when OPEC was inactive back in 2000, and we decided it's not our mistake. There was so much oil in the market. We're not going to do anything in 2015 and 16, and I was there. The reason we did that, it was too much to take from the market at that time, that we will destroy our market share. And the market share then was very relevant, because if you take 4 million, 5 million of your production, you're not going to get that back. So when OPEC was not there, people are saying, what if OPEC is not there? And I tell them, go and look at 2015, 2016. OPEC was not there. We decided to do nothing. And at that time, the shale production went down by almost 1 million barrels. The world economy slowed down. So lower oil prices, but guess what? No one is benefiting from that. Unemployment, companies bankrupted, and the oil industry in the United States suffered during those 2 years.
You're saying it worked in its range of strategy when it comes to market share going forward?
I think what I'm saying is we are not going to do that, because we are at a much better situation today. At that time, you were talking about significant quantities stored above the 5 years average. There were ships going in the sea, they don't know, we felt everything. So at that time, it did not make sense for us to intervene. And I think the shale oil producers have learned the lesson of not overdoing it. And now we are seeing that adjustment. It happened and it happened rather more quickly. So in between, if you look at from October to December, you see a higher rig counts, and then you see slowdown when the prices, and then you see a decline.
Finally, sir, just want to get your level of concern with the slowdown in China and the fact that we may be in a recession in the United States in the next 2 years.
We adjusted for that when we reduced our production by 1.2 million barrels. So we adjusted for the forecast slowdown in the economy, the world economy, China included, India, and some other countries. So we took the forecast and we adjusted our production or the call on our production in accordance to what we know today as fundamentals. And one of those fundamentals is the expectation of China economy and the world economy.
Your Excellency, thank you so much for joining CNBC.
That wraps up this edition of Access Middle East. For CNBC Business News, I'm Hadley Campbell. Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.